Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the E-mini. And what we saw yesterday was you saw the mid-band hold. Now, your daily mid-band is coming in at 1906.43. What we've seen in the overnight is multiple attempts to try to convert the monthly pivot to resistance. We had the highs into the close yesterday at 1940. The bulls did a lot of damage, theoretically, to the bear case yesterday. The problem is the bulls gave it all back overnight to the tune of 30 handles, all the way back down to the weekly pivot at 1909. They've taken it back up to 1920. The 1919-1920 area has been key. Let me zoom out here. It's been key. It was key here. That was the launching point for the move up to 1940. It tried to hold here as support, and it did bounce it back up to the monthly pivot where it failed right at the Europe Open, and they took it straight down to the weekly pivot. The monthly pivot to weekly pivot move, I'll be honest with you, that's the move I've been waiting for since Sunday night, and they do it at 3:30 in the morning. But Europe has been doing that for years now. And when it happens, you just got to let it roll off your back and move on. So they bounced it from the weekly pivot back up to the key 1919-1920 area. They've traded as low as 1911 here. So you got to see, is the weekly pivot going to provide, like a double bottom, some kind of meaningful support? If it does, doesn't really matter until they can get through 20, monthly pivot, and 1940. So there's three key layers of resistance up above for the bulls today if they're going to be able to do that. All the bears really need to do is take it down below weekly pivot, below 1906. So you've got your daily midband running right along in here, in between the pre-FOMC price and the weekly pivot. So here comes your daily midband here. Okay, all the bears have to do is really crack these three areas. And if they're able to do that, then we'll be printing something with the 18 on the front of it, by the end of the day. So we're at a key juncture. The bears have flexed their muscles. We've got to see how the bulls are going to react. So we talked last week about how, look, there's going to be a bounce. There's going to be a multi-day bounce. The key to the multi-day bounce is, how do the bears react? Well, the bears are trying to react right now. The best way for them to react is to break all of those areas, get back down, and break the Friday low at 1876.5. If they do that, I think that's pretty much the end of this particular rally, and that puts the bears in a good position to push the market down back for a retest of the lows from January. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.